Okay, so in this video, I'm going to be giving you guys an update to my previous two Euro USD analysis videos. All right, now originally I put out the first Euro USD analysis video on the 28th of December, and that was right around this area. If you guys can see, this is the 27th, this is the 30th. And when I put out that video, I mentioned my analysis, and I came out with a masterclass Euro USD analysis video sometime later. Now, which is pretty funny. I had someone that messaged me and said that they want a refund because apparently they took the trade in the direction I was expecting the market to move in, and I'm assuming that they must have lost some money, so they wanted a refund. I don't know how they're going to get a refund. Whoever you are that messaged me and said you wanted a refund, you're not a student. And second of all, which should be the first thing, is this: when I put out, whenever you hear an analysis online, someone giving their bias on which way the market is going to go, you have to make sure that you analyze that chart for yourself. If you find that what they're telling you is true, then you trade on that market. So it's not on them for you taking that trade. All right. If you don't know how to trade and you're just looking for an alert or a signal, that's on you. If you took my analysis and saw that it was factual and you traded it, first off, that's on you. If you took my analysis and you didn't analyze the market and you just traded it, that's really on you. Because I'm not giving a signal, you still need to analyze the chart. All right. If you don't know how to trade, and you need to learn how to trade instead of just taking an analysis or a bias and running with it. All right. So basically, this is a shout out to whoever this person was, whoever this guy was that mentioned that I owed him a refund. Please listen to this video. All right. So in this video, what I'm going to do is I'm going to analyze the chart based on where the market was on the day that I analyzed this chart. And I'm going to show you all how I arrived at that analysis. All right. And this can be based on VPAS, which is my visual price action series. This is something that I do exclusively for my students. I'll say it again. This is something, the visual price action series is something that I do exclusively for my students. All right. I'm going to give you guys a taste of it right here. Okay. Now, at this point here, all that we had was this. Let me get rid of this. I'm going to get rid of this. All we had was the market had come here, and I saw based on this, I said, you know what? That market is going to go up. Okay? Now, let me stop there for a second. When I give out an analysis, when I gave out my analysis based on this, okay, some of you all may be looking at what I said as in looking to trade the market from a short-term perspective, but I'm analyzing the market from a long-term perspective. I am a long-term trader at heart. I can scalp the mess out of anybody's market, but I analyze charts long-term first, okay? So when I gave out the analysis, it was based on where I saw the market futuristically, not in the next 5 minutes or the next 20 minutes or 30 minutes, in the most immediate future. It was more long-term, all right? That's for starters. Now, let's start with where the market was. It was right here that weekend. All that I had was that I saw the market had come here and close after going down to here and pulling back to here. So let's put a level on the wick. And we're going to put a level on the body. And I believe that I had done this in the original video, but we're going to do it again for Mr. Man who said that I owe him a refund. This is for everybody. It's not necessarily for him, for everybody. So let's look left. The market came here, chopped around, came here, dropped down, came here, bounced up again. Okay, see if there's more. The market came here and pivoted hard. It nearly came here, not exactly, but got there. It was close. So we have reason to believe that this market can bounce, or we have reason to believe that this is a good place for the market to make a turn at. Okay. Now remember, the market, it was here. We didn't know this was going to happen. But let me show you all how all of this is connected. Okay, and we're going to do that through the visual price action series that I teach my students. Okay, so I'm gonna tap into your mind. I want you guys to think about what I'm gonna tell you. This is how you should be thinking when you're trading on the market. So this market came down to here and pulled all the way back. It left a wick. So the first thing I'm wondering is, why did it leave a wick? When I look back, now I see why it did that. Okay, I can see why it pulled back there and it closed here. Now I know why. I know the why. The market went up. The market came to here and it opened and it crashed through that level and closed here. So now this is another major question that I have. Why did it break? Why did it have such great momentum through from here to here? Why did it go straight down like that? Why such a big candle when we had itty bitty candles leading up to this point? The reason why is this is a good level. It's just like you hammering through drywall. If you have a thick layer, tough layer of drywall or anything that's tough, you're going to need more force to get through it. So that's what they did. They sent it forcibly through that level. Boom! And where did it stop? Right here. Now, when this candle stopped there, you should ask yourself, why did it stop here? If you don't know, wait another day. The next day, the market did what? It went back up and closed. Not to mention it went up here, pulled back and closed. So now we get to see, okay, after this market, this strong candle here, there was no continuation? You mean to tell me we had such a strong candle here and there was no continuation? So when the market turned around and went back up, I see now that the market opened here and it closed here near the same place. So that's confirming that this is a great place. Remember, we didn't have all of this. This is all that we have at this point. So the market closed here. So now we have confirmation that this is a good level and this is a good level, which makes the zone. Now, when this candle opened, it went up, pulled back and closed. That confirmed that this market is not going down. This is just a fake out. Okay, that's my thinking. So if I'm thinking, okay, the market should be going up, this is supporting that claim, that idea. The market actually went up the next session. After that, the market ran flat, went sideways at this level. Okay, and this is where our initial analysis came in at right here. So up to this point, everything that I had analyzed is telling me that we have reason to believe that this market can go up. We may not have gotten the reason, or we may not see the move to the upside yet, but we have reason to believe that this market is likely to go up. And that's where the analysis came in at that point. Now, like I said, when you go back and you look at this zone, you can see why I'm expecting it to move to the upside. You can see why I'm questioning why one would question this level here. Like, why did it open here, close all the way down to here, and there was no continuation? All right, it's a reason why. Now, moving forward, on the 30th, it opened another day, wrapped around this level. The next day, it dropped down, where? To this level. Okay, the next day, the market opened within the zone and closed beneath the zone. Came down to here and pulled back. So this candle here is still connected to this zone. The reason why is it opened inside of the zone, closed below it. It's still connected. They got 1 foot in, 1 foot out. You're still connected. All right, the next day, let's stop here. Most traders would have seen this and they would have considered this a breakout. And they will be trading this market down. Because, you know, they feel like, oh, it broke through support, it's going down. That's why I teach my students, do not trade from support down. You trade from support going up. You trade from resistance going down. If you traded this going down, you would have lost because the market went up the next 24 to 48 hours, went back up. So you would have lost. Now, eventually it went back into the money, depending on where you would have gotten in, but why even go through all that? Just don't trade it down through support. So the market went back up. This candle, like I said, was connected still with this, so it didn't change my bias. I got my eye open, like CBS. I'm watching, okay, I see you close below it, but now I'm waiting for it. This is my thinking. If this market doesn't continue after the initial close outside of it, then I know it's really, that was just a fake out to get people to buy into the lie. What did it do? Went back up. Next day, went back up. Now we're back in the zone. The next day, it went back down. Next day, back down. Next day, back down. Guess what? I don't care if it goes back down 3 days in a row, 4 days in a row. Guess why? Because I was okay with the market being 1 foot in, 1 foot out, all the way down to here. I was okay. I didn't jump out. So why am I going to jump out here? And then the next day opened and went down to here, all the way down to here, but it closed here. Not too far off of where the bodies were. But it's well within the wick of the previous day at the close. The close is what matters, not what it's doing during the day. It's the close. Because the close was within the wick of this body, the lowest point, at that point, I'm not going to jump out. It's still connected. Because if this is connected to this zone, then even though the market came up and pulled back to the same area, it's still connected to all of that. So what did the next day do? The next day opened off of a gap down. It went all the way down, and this is how they get you. See, they'll gap the market down. They open the market further down. They sent it down, and then they turn the market around, and they sent it back up, leaving a nail in the ground. Sent it back up, closing at the same place it closed the day before. The next day, back up. The next couple days went sideways, but it's still within the same area. All this is still connected. Even though my analysis is based on this, we didn't know all this was going to happen, but guess what? We can only go off of the formation that they left behind. They left all this behind, so we have to base it off of what they left behind. This candle is still connected with this. It's 1 foot in, 1 foot out. So everything that's in this area is still connected. The fact that this candle here opened within the wick is still connected. The fact that after that, we didn't have a reason to get out all the way, extend this stuff down to there, that's only to get people who were selling the market through that, to get them to buy, to get them pulled out of the market. So they pulled them out, had them forced out because it went all the way down. And also to get more people to buy into the lie that it's going to go down, and then they turn it all the way around. And then sent it up. Like I said, the next day went up. Next 3 days, sort of went down some, still within the bodies. All this is connected. And then last week, it went from the bottom and it closed above the zone. All right? And I was telling someone, I was telling my students, I said, listen, this is a major move here. Closing above there. Major move. Because it basically broke through the whole zone. And then it went sideways right here. The same way it did here and went down, it went sideways, and guess what? It's going up. So, listen, I'm no psychic. But one thing that I do know how to do is I know how to analyze some charts. And one thing that I realized is that it's all about levels. Once you realize that, you will then learn how to trade the market successfully. All right? And please know, like I said again, please know that if I put out anything online, you have to know that it's all an analysis. Go back and check it yourself. Okay? Go back and check it yourself and make sure that it's solid. If you find that it's solid, then you trade it. All right? Keep it very simple. So this is pretty much what I wanted to show you all. This is my updated analysis on the EURUSD. Make a note of it. You can go back and watch my previous 2 videos. The first one was put out on December 28th, and then the next one, I put the next one out on the EURUSD price action masterclass on January the 7th. So I put out the next one on this day right here. Because again, on this day, on the 7th, all I had was, the market broke through. He had 1 foot in, 1 foot out. The next day it went up. There was no continuation down. The next day went back up in the zone. So to me, this was another reason to believe it's going to go up. Yeah, days, a couple weeks after it went down a little further, but look what it did. It climbed through. It basically wrapped itself in and engulfed everything that happened in like 2-3 weeks in one candle, if not more. From here to here, 5 days of movement, wiped all that clean like it never happened. Says a lot, all right? So hopefully this makes sense to you guys. I'll see you guys in the next one. Just as I tell you guys all the time, have nothing short of a fantastic day. Remember, stay healthy, stay safe. As always, remember to remain and stay creative in the times we live in. I'll see you guys in the next one. All right? Peace and blessings, everyone.